Hello, my name is Adela Estrada, and today I will be going over Caterpillar Inc. and an equity research report. Today we will be going through the introduction of the company, its business model, the industry analysis, its corporate governance, the financial analysis, a regression analysis and beta, along with the stock valuation, technical analysis, and a conclusion with a recommendation. Caterpillar Inc. is the subject of this financial analysis research report. Caterpillar Inc. is traded on the New York Stock Exchange on the trading floor in New York City and has a ticker symbol of CAT, C-A-T. Caterpillar Inc. deals in the construction, road building, mining, forestry, energy, transportation, and material handling. The analysis of Caterpillar Inc. has led to a recommendation of keeping the stock if you have it. The business model. Caterpillar Inc. is an American corporation that specializes in designing, developing, engineering, manufacturing, marketing and selling machinery, engines, financial products, and insurance to customers through a worldwide dealer network. Caterpillar Inc. is a leading manufacturer of construction and mining equipment, diesel and natural gas engines, industrial gas turbines, and diesel-electric locomotives. The company's history can be traced back to 1925, the year of the merger between Holt Manufacturing Company and the C.L. Best Tractor Company, creating the California-based Caterpillar Tractor Company. Originally headquartered in San Leandro, California, the company moved to Peoria under the new terms of the merger. After the merger, the company consolidated the available product lines, offering only 5 types of tractors. From the Holt Manufacturing Company, the 2-ton, 5-ton, and 10-ton tractors, and from the C.L. Best Tractor Company line, the Caterpillar 30 and Caterpillar 60. In their first year, Caterpillar Inc. made $13 million in sales. By 1929, sales rose to $52.8 million. Caterpillar later adopted the diesel engine to replace gasoline engines. The company first found fame during World War II. During this time, Caterpillar products found fame with Seabees Construction Ballotons of the United States Navy, who built airfields and other facilities in the Pacific Theater of Operations. Caterpillar Inc. also ranked 44th among United States corporations in the value of wartime military production contracts. The company began growing at a rapid pace. During the post-war construction boom, Caterpillar began their development into a multinational corporation as they launched their first venture outside of the United States in 1950. Caterpillar Inc. provides financing and insurance to its customers through its worldwide dealer network and generates income through the licensing of the Caterpillar and CAT trademarks and logos. The corporation's products are distributed to end users in nearly 200 countries through Caterpillar's worldwide network of 220 dealers. These dealers are independently owned and operated businesses with exclusive geographical territories. Dealers offer sales, maintenance, repair services, rental equipment, and parts distribution. As of the first quarter of 2006, 66% of Caterpillar's sales were made up by one of the 63 dealers in the United States, with the remaining 34% sold by one of Caterpillar's 157 overseas dealers. Today, the Caterpillar Corporation has over 400 products they sell through their dealer network. The corporation's line of machines range from tractors to hydraulic excavators, backhoe loaders, motor graders, off-highway trucks, wheel loaders, agricultural tractors, and locomotives. Caterpillar machinery is used in the construction, road building, mining, forestry, energy, transportation, and material handling industries. Industry analysis. Caterpillar is the world's leading manufacturer of construction and mining equipment, diesel and natural gas engines, industrial gas turbines, and diesel-electric locomotives. The company primarily operates through its three product segments: construction industries, resource industries, and energy and transportation. And they provide financing and related services through its financial products segment. Customers turn to Caterpillar to help them develop infrastructure, energy, and natural resource assets. With 2016 sales and revenues of $38.537 billion. General environment. The environment can be classified as less complex, dynamic, and rich. The general environment contains economic, social, cultural, global, technical, political, and demographical influences. Since Caterpillar has transitioned to the global industry, they have experienced various economic forces in different geographic regions. Technology plays a large role in almost every product division and is changing so rapidly that the knowledge behind it has become pivotal. The process for no product is quite slow. It can take up to 2 to 4 years. While the production may be slow, the change in the production technology is challenging, and upgrading to newer production technologies generally gives a competitive advantage. Industry environment. Caterpillar's main customers are contractors, equipment rental companies, and OEMs, original equipment manufacturers. Customers have become more demanding of quick deliveries and goods after-sale services as new entrants have emerged. With more options, Caterpillar is not under any pressure from the supplier, even though the prices of raw material used has shot up by more than 25% over the last year. Threat of new entrants. There's a low threat of new entrants in this industry because of the very high capital required to establish a new firm that produces heavy equipment. Small businesses could enter the industry and provide heavy machinery through small-scale production. However, these small new entrants have minimal effect on firms like Caterpillar. Bargaining power of suppliers. The Caterpillar suppliers are companies that provide raw materials and components for its products. The company uses various suppliers for its production because it has different manufacturing locations around the world. No single supplier can exert significant pressure on Caterpillar's business. Thus, the bargaining power of suppliers is low. Bargaining power of buyers. Caterpillar's buyers include groups and organizations. For example, construction firms and government agencies purchase heavy trucks and machines from firms like Caterpillar. The bargaining power of buyers is low because of the limited options. Only a few major companies offer products with very high quality and durability compared to those of Caterpillar. Threat of substitutes. The threat of substitution is low. For instance, crude tools can be used as substitutes to heavy equipment from Caterpillar. However, the current trend is toward mechanization and automation. Thus, customers are unlikely to shift away from using heavy equipment like those from Caterpillar. Intensive competitive rivalry. Caterpillar faces high competition in the industry. In heavy equipment manufacturing, there are significant competitors from the countries like Japan and the Netherlands. These competitors are also major players in the global market. They have engineering expertise comparable to that of Caterpillar. In financial services, competition is even higher. There are many small, medium, and large financial service companies that directly compete with firms like Caterpillar. Free cash flow to equity is a cash flow available to Caterpillar's equity holders after all operating expenses, interest, and principal payments have been paid, and necessary investments in working and fixed capital have been made. Caterpillar's FCFE declined from 2014 to 2015 and from 2015 to 2016. In 2009, Caterpillar had a 37% decline in sales and revenues. The decline happened fast, and then came the short-lived recovery. In 2016, Caterpillar is on the fourth year of a decline in sales and is in need of managing at the sales level. It does not help that the U.S. economy is not showing great growth, and the corporation has developed in countries such as Brazil and China at very low levels in terms of the industry. Mining companies have also suffered greatly. The great news is Capital is in strong position to handle an increase in business. This decline is a right opportunity to focus on critical initiatives like digital, lean, and across the table. Corporate governance. Capital's corporate governance structure provides leadership, accountability, and transparency to the company business on behalf of the employees and stockholders. The corporate governance framework serves the interests of stockholders with the highest standards in responsibility, integrity, and commitment. These standards are developing and implemented by the board of directors and global management team who oversee the company's performance and governance policies. Capital's corporation has a board of directors that has 13 members. This number allows for the diversity of the experience without impeding effective decisions or diminishing individual accountability. The company policy indicates that the absence of unavoidable conflict, all directors are expected to attend the annual meeting of stockholders. Every one of the board members attended the annual meeting in June 2016. The corporation's board has 3 standing committees: Audit, Compensation, and Human Resources, Public Policy, and Governance. Each of these standing committees is comprised exclusively of independent directors. The Audit Committee supports the board by fulfilling its oversight responsibilities with the integrity of Caterpillar's financial statements, their compliance with legal and regulatory requirements, the qualifications and independence of corporations' independent registered public accounting firm, auditors, the performance of their internal audit function and the auditor, the effectiveness of Caterpillar's internal controls, and the implementation of effectiveness of the Caterpillar's ethics and compliance program. This is achieved by monitoring the corporation's financial reporting process and internal controls, by assessing the audit efforts of the auditors and the internal auditing department. They have the ultimate authority and responsibility to appoint, retain, compensate, evaluate, and, where appropriate, replace the auditors. The committee also reviews updates on emerging accounting and auditing issues to assess their potential impact on the organization. All members of the committee meet the financial literacy guidelines adopted by the board. Additionally, the board has determined that each member of the committee qualifies as an audit committee financial expert, as defined under SEC rules. The Compensation and Human Resources Committee supports the board of directors in fulfilling its responsibilities in connection with the compensation of company directors, officers, and employees. This is done by establishing and overseeing compensation programs, recommending the compensation of directors who are not officers of the company to the board, administering the company's equity award stock option plans and options and restricted stock grants. The committee also provides general supervision over employee relations matters. The Public Policy and Governance Committee supports the board of making recommendations about the size and the composition of the board, criteria for the selection of candidates to serve on the board, and the slate of the director candidates to be nominated for the election at annual meeting of shareholders. The committee also recommends to the board candidates for election as officers of the company. They also manage the guidelines on corporate governance issues and leads the board in its annual self-evaluation process and shares the results with the board of the discussion and deliberation. Another task is to provide general supervision of public policy matters. Stockholder nominations need to be in writing, received by Caterpillar's corporate secretary no later than 90 days prior to the meeting. All of these committees must and do meet the standards of independence set forth in the New York Stock Exchange listing standards. Committee membership consists of David Calhoun, Danielle Dickinson, Juan Gallardo, Jesse Green, John Huntsman, Dennis Muhlenberg, William Osborne, Deborah Reed, Edward Rust, Susan Schwab, Miles White, and Rayford Wilkins. Financial analysis. In this section, an analysis is performed on Caterpillar's financial statements against a benchmark competitor. Key ratios below articulate Caterpillar's performance over a 4-year period. Competitor benchmark analysis. To analyze Caterpillar against a benchmark, an industry average was created using competitor Deere & Company, John Deere, DE data. 4 years of balance sheet and income statement data was collected and analyzed. After collecting and analyzing the data, an average was computed and used as the industry average. Financial ratios from leverage, activity, profitability, liquidity, and investment were used to draw comparisons. Disclaimer: the following financial analysis charts are shown with the years descending or in reverse order. The current ratio. Caterpillar's current ratio is not as high as their competitors, but is acceptable and can reach a current ratio of 2-to-1, where the company is likely to be able to pay its obligations. The quick ratio measures the dollar amount of liquid assets available for each dollar of current liabilities. Caterpillar has a very low quick ratio compared to the industry, putting them in poor liquidity position. The higher debt ratio, the more likely they are implying greater financial risk. In comparison to the industry, Caterpillar has a lower ratio and is in a position of a lower financial risk. The debt-to-equity ratio is a measure of the relationship between the capital contributed by creditors and the capital contributed by shareholders. A high debt-to-equity ratio tells us that the company may not be able to generate enough cash to satisfy the debt obligations. Caterpillar is exceeding in the industry in the debt-to ratio. Inventory turnover ratio measures a company's efficiency in being able to turn in its inventory into sales. It measures the liquidity of the inventory. Average inventory should be used for inventory level to minimize the effect of seasonality. In comparison to the industry, Caterpillar is not turning over as efficiently, with close to 4 in the turnover ratio. Asset ratio is a ratio of the value of a company's sales or revenues generated comparative to the value of its assets. In general, the higher the asset turnover ratio, the better the company is performing, as they imply that the company is generating more revenue per dollar of assets. Caterpillar is significantly higher in asset turnover in comparison to the industry. Caterpillar's gross margin is exceeding the industry's, which is great for them as investors tend to focus on the profitability ratios. Return on investment is typically used for personal financial decisions, to compare a company's profitability or compare the efficiency of different investments. As the graph to the right shows us, there is a slight decrease in return on investments for Caterpillar. While the industry and Caterpillar are very similar in their return on investment percentages, Caterpillar is still below the industry in profitability. Price/earnings to growth, or PEG ratio, is a stock's price to earning PE ratio that is divided by the growth rate of the earnings for a certain length of time. When a price-earnings ratio is below 1, it means that the stock is undervalued. Currently, our PE ratio is in the negatives, so it does indicate that Caterpillar's stock is undervalued. Regression analysis and beta. Below is a beta analysis for Caterpillar Inc., and the data was collected from Yahoo and uploaded into Excel. The beta was calculated using returns of the S&P 500. The beta suggests that Caterpillar has a 1.113% return change for every 1% change in the market rate of return. The beta is considered less risky than the market, and the R-squared could be interpreted at 40% of the risk in Caterpillar stock is non-diversifiable or systematic, and 60% of the risk in the stock seems to be diversifiable. Stock valuation. The capital asset pricing model used to be appropriate to the cost of the equity for Caterpillar. The risk-free rate is 3% and the return on market is 12%. Beta was calculated above and is 1.13. Estimating the PV of cash values per share for the next 5 years. And here it shows the net income, depreciation, capital expenditures, shares outstanding, beta, risk-free rate, return on market, and growth in the next 5 years. Even calculates a growth rate of 2%. So after 5 years, our PV is $30.75. $30.75. And here we have the calculations of the terminal value being $15.32, PV terminal 139 with 2 cents, and the closing price year end was $100 with 99 cents. The terminal value of Caterpillar after period 5 was calculated by assuming the terminal growth rate of 2%. The stock price is the sum of the PV of cash flows in high growth period and the PV of terminal price. The intrinsic stock price of $106.15 is more than the closing price of $100.99. Therefore, it does conclude that the stock is undervalued. Technical analysis. In this section, as part of the valuation, Caterpillar stock is analyzed using a 50 and 200 days simple moving range. Two of the most common support and resistance levels are the 50 and 200 day moving. These crucial technical indicators for investors and technical traders. They use the averages as a signal to decide to enter or exit a position. Over the past 5 years, Caterpillar's stock has traded above and below its 50 and 200 day moving average on various occasions and even appears directionless or in a holding pattern for the recent 5 years period. The graph below currently shows the Caterpillar stock has risen above the 2 key point levels. The chart below has data pulled from Yahoo Finance and shows Caterpillar's common stock. So as we can see, it is above the 50 and 200 day markers at 100.71. Caterpillar's strengths include its strong brand image, large-scale assets, and strong global distribution network. The company's strong brand image is based on the fact that the Caterpillar name is well known around the world for quality. The company has large-scale assets that can be used to support further business growth and development. In addition, the firm has a large global network of distributors. Its weaknesses include the low rate of innovation and limited connections in emerging markets. The low rate of innovation is typical of heavy equipment and financial services industries. However, this weakness makes Caterpillar vulnerable to competitors that aggressively invest in technical innovation. Limited business connections in emerging markets prevent the firm from maximizing revenues. For example, while it already operates in China, Caterpillar still lacks an extensive network of distributors in the Chinese market. Caterpillar's opportunities include increasing the revenues through growth and expansion and increasing competitive advantage through innovation. The company can grow and expand in emerging and developing markets, especially in Asia. The business can exploit construction boom in these markets. Caterpillar can innovate to develop better or new products to capture more of the global market. The threats of the Caterpillar's business are imitation and aggressive competition. Imitation has become an issue in the advent of local and regional firms that to supply copy the original designs of global firms. For example, some Chinese manufacturers could easily use Caterpillar designs with some modifications to produce products that compete against Caterpillar. On the other hand, aggressive competition could come in the form of rapid technological advancement of major competitors. For example, Japanese competitors could integrate robotics in their products to make them more competitive than Caterpillar's. Recommendation: in the next 5 years of operation, Caterpillar can recuperate performance through differentiation. The company needs to invest in research and develop to create unique products. Currently, the heavy equipment and engines and financial services of Caterpillar are very similar to the ones available of its competitors. To increase the competitiveness, the firm needs to invest more in the development of new and unique products. Caterpillar could also develop its financial performance by increasing its distribution network in the next 5 years of operation. The firm also needs to focus on developing markets because these markets have high economic growth rates. For example, the company can increase the number of Caterpillar distributions in China or overseas. The recommendation is to keep the stock if you have it. In this industry, it is hard for newcomers to take over, and if Caterpillar invests in its technology, research, and development, they could easily gain the edge and increase the competitiveness. Thank you for your time.